think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show where we think, act, and prosper. Now today I'm going to be transparent. I lost money on this trade. Now, let me clarify that. I did lose money by playing options on some of the commodity trades. I've talked to you all about the issue that is going on with the wheat and how Russia and Ukraine exports a lot of wheat. And so I jumped into a wheat trade on a parabolic high. Now, this is very dangerous because whenever you see something spike very high, you do not want to chase the market. You want to actually have reasoning and actually use logic to see that, okay, well, someone's going to sell this thing off, because it spikes so high very quick. And usually you want to have a 3-day rule. So if you see something spike very high, then you usually want to wait 3 days before you invest into the trade. And I did not follow this principle at all. This is actually a principle I learned from Gareth Soloway and everything on InTheMoneyStocks.com is that you wait 3 days because you have a lot of people come in and they buy the shares up. And then you have institutions that come in and sell off. And then you have retail investors that sell off when they see that the price is going down and everything. And then you want to wait till that 3rd day before you jump in. And so I'm going to show you all how I lost money on this wheat play. And I want you all to just learn from my mistakes. I mean, I'm not really a trader. However, I did try to trade this stock and my options are down right now. I do expect them to bounce back higher because of the macro outlook, but I did time it wrong and I did not get in at the right time. So let's go ahead and look at the charts now. So what we're looking at is wheat. So this is a wheat fund. It is WEAT, wheat. So this fund is basically tracks the wheat futures and such because we know that the macro picture for wheat is that Ukraine and Russia export about 1/3 of the world's wheat. And I've talked to you all about the food crisis and things like that. And so this is why I jumped into this trade. So as you can see, it's been trending up for a while. You see, since last year, it's been trending up. You had some ups and downs. But then when you get over here to around February, mid-February or whatnot, you see that the price just starts to spike up. So you see this huge spike up to about $12.74 within a matter of days. And so it went from about, if you take the bottom from this one, $7.73, all the way up to about $12.73. So I actually bought in at this top, which is dangerous because people are actually selling whenever things spike up that quick. Things do not go up in a straight line, and I did not follow the principles that I've learned there, and so I want to just be transparent with you all and share that. Things do not go up in a straight line, and as you can see down here is the volume. This is the volume of people either buying or selling the share. So you had, buying, in February, then the price started going up, and then you had people selling, and that's where you see the price went up. People sold it off down to about $8. People sold it off again. That's where selling is right there. And then you have, buying. So 4 days of buying, which caused the price of the share to spike up to about $12.74. Then you get this big, huge bar of selling. So it got sold off, the stock sold off, and you see that it actually dropped to about $10.21. So my option lost a lot of premium on that. I think I'm down about 100 and something bucks. I didn't go all in on this trade, but it's still something that I don't want to lose because I work hard for my money. And then you get some more buying. So then you see that the price spikes up again to about $12.56. And then you get selling, you get people selling. So now, this is about, it hit about $9.60 something, and then it closed today a little bit above $10. And so when you're looking at this, you want to make sure that you wait 3 days. So whenever this stock spiked up this high, I should have known that there was going to be institutions selling. They made some massive profits. The stock just went straight up in a straight line. Things do not go up like that. That's not realistic for investments. There's corrections and things like that. So I should have listened to what I've learned and just kind of paid attention. And sometimes you're going to make mistakes like that when you get into the market. Nobody really just comes in and they're a perfect trader and things like that. Even Gareth Soloway talks about he learned a lot from losing money. So this is one of the lessons that I've learned, and this is what's hammering it home for me, is that I did not come in and look at the charts and see that, oh, well, we got a huge spike up. Why am I buying into this? I should wait for the sell-off, which we did get the sell-off 3 days in a row. And then now I should have bought and entered around here. This is usually the third day after institutions dump and retail investors dump. This is where you normally want to enter. It's called the 3-day rule. So I hope this is helpful to you all. I wanted to show you all some of you don't really watch the bar graphs or the candlestick charts. So I'm going to show you the line graph. So I came in and I bought around up here, and then institutions started selling off. So yeah, so that's a lesson learned for me. I did lose money on this trade. However, you only lose once you sell. I believe that wheat's going to go higher because of this conflict, so I can actually hold on and not take a loss in the future. I believe that I won't take a loss. However, you always want to watch your entry point when you're getting into a stock. So you want to know what is your entry point. And so I wanted to share that with you all. I hope this was helpful. Hope that y'all have a blessed day. All right.